Hey, it's Mark Yagi. I hope you're doing well. It was 4 days ago that I put out this video about Tesla and what I think it's going to do, and sure enough, it's done that. And let me show you on the screen what it's doing. But better yet, I'm going to show you how you can make money on this. And then at the end of the video, I'm going to show you how that translates into lifetime income, okay? So let's start with this. First of all, here's a chart on Tesla. And you can look, I got lots of red lines drawn on it. But when I was talking about it, well, certainly over the last few months, I've been talking about these key swing points. 271 is the obvious one. 265 is the top of a cup and handle. The top of that handle, which is also a breakout point. You can see both of those swing points, breakout points, it tried and failed into a kind of a lousy market that we had a couple weeks ago, right? You can see 5-6 days in a row on light volume. So we had a failure of the breakout. But usually when you get a light volume failure on a breakout and you get a positive market like we have right now because of the election, we have a big breakaway gap in this case. And so you're looking at a breakaway gap where it broke from like the $250 area, and if you woke up on Wednesday and you started trading, you saw that the stock was heading toward 300 bucks. So it was above these two swing points. Now the third swing point I talk about was this $300 swing point, which goes way back before the stock went all the way down to 138. Now it's trying to get back to that $300 swing point. If it could get through the $300 swing point, I said, with volume, I said, we're looking at a breakout. And now this is an obvious breakout. And you can see, look at the volume on the bottom of the screen that's supporting this breakout. Now the official breakout, I would say, the best breakout on the chart is this gap up, right? Or if you don't like the gap up over the breakout spots that I pointed out, then it's this $300 because that's a huge amount of volume on that $300 gap up, which was just a day ago. Okay. Today we gapped up again. We're up like 8%. Look at the stock. It's at 347. We're an hour into the market here on Monday. And I want to talk to you about how you can make income on this stock. Now, you might get tired of me talking about Tesla all the time, but I think it's one of the best stock opportunities that we've ever had and ever will have. And I think you're starting to see the beginning of it, right? And I don't think it's too late to catch this one, but maybe it is. I don't know. I'm not Nostradamus. I don't know if stocks are going up or down. I just try to play probabilities. And let me show you how I would play the probabilities. By the way, before I get into that, you could see the top of this bar is 328.71, okay? And the close is 321. Let's just call it 320. So I think it wants to come in and fill this gap. I don't know when it's going to do it. It may not do it for 10 years. It may do it today. I don't know. I'm just saying that gaps get filled, and I see a couple of obvious gaps. Here's one and there's one on the chart. This one's a little less likely to be filled in the near term because there's a lot of great momentum behind Tesla. Now, here's the way I like to play things. I'm an options guy, but I'm not a take risk options guy. Right now, as I'm going to show you, there's a lot of juice in Tesla. And if you pay that juice, it puts you in a hole. But if you get that juice, it puts you in an advantage. Let me show you what I'm talking about. Here's the option chain on Tesla. And if you've never traded an option, a call option is the ability to have, if you buy a call option, what you're doing is you're getting an option to buy a stock at a predetermined price before a predetermined date. So if I show you this 320 option and you buy it, you're going to spend $30 to buy it, okay? And you get the right to buy that stock at $320 before it expires on Friday. So it's got about a four and a half days until expiration, okay? Same thing here. If you think Tesla's going higher, you could buy an option for $350. Let's say you think it's going higher than $345. Pretty good chance, right? Well, you've got a 46% chance of that happening. That's what that delta is there for. And so if the stock goes up another $5, you're going to end up buying this for $13.25, which means that if you want to break even, if you're a buyer, you've got to get $363.25, the $13.20 plus the $350 in order to break even. Otherwise, you're going to lose. That's why 80% of all owned options expire worthless. It's a general statistic. Doesn't always work out like that, but generally what it's telling you is that the odds are stacked against you because you're leveraging your position, okay? And for leverage, you have to pay a price, right? That's the way the world works, right? You can't get something for nothing. So if you want to be a home run swinger and try to just swing for the fences, you can buy this option for $13.50 and hope it goes to $363.50, okay? Chances are you only got a 49% chance or 47% chance of that working out in your favor. So I wouldn't do that. Like, you got to go a lot higher than 350 for this stock to make you money. But what if you sold the option? That's what I teach people how to do every single day. If you watch my channel, if you watch any of the videos or the blogs that I put out, this is what I talk about all the time, right? So I have a trading plan that I put together, and you need a trading plan too. Everybody needs a trading plan. And I'm going to say, I just did a stock analysis over here on the chart, and I showed you where I think, there's a gap that could get filled. I think there's a chance of it getting filled soon. Well, why wouldn't I just want to protect myself to fill that gap if I could still make money doing it? Let me show you what I mean. So if I look at, these are all the strike prices for all the calls. The calls are over here on the left side and the puts are on the right. What I'm going to do is I think that it could go to that closing price on Friday, which is 321. Let's go to the 320s. Here are the 320 strike price, right? And those are selling right now for $30.60, okay? I've got a 79% chance of being over 320 by Friday, 4 days from now, right? 78% chance, 79% chance in the market, that's pretty good. And if I get that, if it stays above 320, I end up pocketing $4.90 or $490 a contract. A contract is 100 shares. Make sense so far? So that's got a pretty good chance of me being successful. And if I'm successful, the numbers show you it's a 1.4% chance of that, 1.4% return. And if I can get that return over and over again, in other words, if it's over 320, which it is now, and it stays over 320, which has got a 78% chance of doing by Friday, then I get to make 173% return if I can do that over and over and over again for 52 weeks every single time. I'm not saying I can't. I'm just saying this is giving you the annualized so you can compare apples to apples. So maybe I say, you know what? Maybe I do the 325s. Because that's still in that gap somewhere, and it goes in there and it fills that gap. Now, I get the 325s. The juice there is $632 per contract, which is 1.8%, which is a 222% annualized rate of return. Okay, crazy sounding, right? You can do it. The computer says you can do it. In practicality, it's a lot harder to do, but you can still get pretty good returns. I'm saying we're going to do 1,000 shares, okay? Now, 1,000 shares is going to be $325 times 1,000. It's $325,000 to do this trade. But you're going to get back $6,440 in income this week. If you do that 4 times in a month, it's 24 grand on your $325,000, right? So you're going to buy the stock, 1,000 shares. You're going to sell 10 contracts because each contract is 100 shares. And that means you're going to get $2,585 back per contract, okay? That's how much you cushion your account with. Not all of that is yours to keep. A lot of that's what's called in the money amount, right? In the money amount is how much the stock is in the money. And right now it's about $20 in the money. So the difference is the juice. The juice is what we're after. We're not trying to kill it and make money on the stock going to 400 and, take all this risk. We're trying to protect our risk, okay? But you're like, Mark, that's $325,000 less $26,000. So it's about a $300,000 trade, right? $300,000 trade to do 1,000 shares. That's expensive, right? $32,500 to do 100 shares, okay? So if you're like, Mark, I don't have that kind of money, you could just lop off a 0 if you want, or lop off a 0 and multiply it times 3, whatever the number is for you. But I have a different way you can do it as well. But before I get to that different way, a lot of people like to sell puts. So let me address the selling puts side of this. Instead of selling the 325 calls and getting $6 for them roughly, okay? What if I were to sell somebody else the right to sell me the stock, the put side, the dark side, the Darth Vader side of trading, right? That's the put side. And that basically says, you know what? I'm going to sell the puts. I'm going to give somebody else the right to sell me the stock at a certain price. So in the case of this 325 put, you're going to get $585 per contract, but somebody else is going to be able to sell that stock to you at 325. Okay? So you're going to be buying the stock at 325. Now, the problem with that, and this problem I have with puts, it's roughly the same return. Let's look at the return. It's 580 over here, or 1.68%. Or it's 596 or 1.75%. It's roughly the same return. This one requires a bunch of cash to do the trade. This one requires a bunch of cash in the account to be able to do the trade because it's called a cash secured put. You have to have the money in case you end up having to own the stock at 325. Okay? So yes, you can make this money and your money sits in the account and gets a little bit of interest until Friday, right? But here's the problem I have with puts. And a lot of people are like, well, puts are better. I don't know if they're better. First of all, it's hard to get your brain around the dark side. Like you're going to make money if the stock is going down and you want to buy the stock if it goes to 325. But like, what if it's on its way to 300 or 250 because it was just there like 5 days ago? If it's on its way there, like, do you want to be owning a stock on weakness, on breakdowns? That's the problem I have with puts. They're great. You can see that they're pretty equivalent. But the problem I have with them is that you're buying on weakness. You're trying to catch that falling knife, and I don't like that. But let's say you don't have the 325,000 to do 1,000 shares. Well, there's a way to do this using what I call synthetics. Those are deep in the money calls that instead of having to spend $300,000 to control 1,000 shares of Tesla, you could spend a fraction of that. So here's how I do it. Okay, and there's a lot more to it, but I'm just going to go quickly here. Let's say you go 3 months out to February and you say, I'm going to look for like between an 80 and a 90 delta. So we find this 90 delta right in here. We call it the 240s. Well, the stock right now is at 346, so it's $106 in the money, right? And this will cost you $116.75 per share, or $11,600 a contract. Costs you, because you're spending money to buy this. You're not getting it. And that means you're also spending this juice. It's almost $9. Well, it's a 3-month call, so you amortize the juice out to, over the next 3 months, and you say, well, that's about $3 a month that it's going to cost me for this leverage. Okay? You're still controlling the shares, and you got a 90% chance of being right with a 90 delta, but you don't have to spend as much money. In other words, in doing 1,000 shares, you only have to cough up $117,000, right? 117 now, right? And so if you only have to cough that amount up, that's about a third of the amount that you had to cough up before. So you could do 1,000 shares with this, which goes back to our calls and said, you know what, we're going to sell the 325s, and we're going to get about $6,000 on that, right? And so that's the goal, is to focus on that income, right? We could also, if we wanted to make money on this, just to give you an option, an opportunity to see what it looks like, you could go slightly out of the money. This is what a lot of people call me. They go, Mark, why would I want to sell in the money? It's crazy, and I'm going to lose all this money over the strike price. Well, you won't. I wouldn't be telling you if you did. But let's say that you see the stock here at 346. You go, well, the stock is at 347.50 is paying me $14.55 in juice. You get, instead of getting $600 a week in one contract, you get $1,460. And you go, Mark, well, why wouldn't I do that? Well, because I think the stock has a good chance of dropping and filling that gap. If it does, I've got a cushion. I've got this cushion because I ended up getting $27.75 per contract in cushion. Okay? I make a ton more in juice if the stock stays up here. But in this case, right around the money, you can see I only have a 53% chance of it happening, right? Of it being in the money by the time Friday rolls around. 325, I've got a 75% chance of it happening. Okay? So let's put this, let me tie a bow around this. I would say, you buy the stock, you sell the call. In any case, you're getting $5.76 or around $6 a share. 1.67% or 203% annualized. Okay? Let's say you could just get 1.67% every week, 1.67%, and let's call it 50 weeks. That's 83.5%. Let's just cut it in half. Okay? Let's cut it in half. Now hold that number. Cut that 83.5% in half, even more. We'll just say it's 40%. You can make 40% on a trade like this, and you got a 75% chance of being right. That's what that delta is telling you. Now, what could happen? Well, if you buy the stock and the stock goes up, let's call it $80, okay, from here. Well, let's say it goes to 400, okay? It goes up $55, let's call it. If it goes up to 400, it's going to cost you the in-the-money amount. You've got to end up spending $80, the difference between 320 and 400. You got that? So you have to spend that money, that in the money, to buy back your calls. Now you got the juice, but you have to spend that money in the money amount. When it expires, it's only got in the money amount. Okay? or right before expiration. You're also, if you own the stock, going to make $80. So those two are going to offset, right? So you're gonna gain that amount of money on that trade. You're not going to lose money because the stock goes up. In fact, that's what you want. You make your 560 or 576 or whatever the number flashes around to be, $6, $600 a contract, 572 a contract. Okay, that's what the goal is. So you want it to be over your strike price. That's why we're doing the 320s. Got a much better chance of that happening. Okay, it's less money in income. Now, the second way is to sell the puts, kind of the same kind of deal, right? And the third way is to sell the calls, still get the same income, but instead of spending $300,000, you're spending $100 and something thousand. So you're basically 3xing your return, right? You're only having to put up about a third of the amount of capital, right? And you could do 1,000 shares with just over $100,000 like I showed you, right? So that's how the math works out. Now, what could happen? Well, the stock could go up and it could go down. On a synthetic, on an in-the-money call, you've got to defend that position on the way down. You've got to learn how to do trade adjustments. But remember that 40% I asked you to remember? Like if we're going to make 83.5% because we're getting 1.6% a week and we do it for 50 weeks, that's 83.5%. Cut that in half to be conservative. You've got to be able to beat inflation. And 40% beats inflation, doesn't it? And I don't know if it's realistic or not. I've certainly done it. Most of the people in my mastermind group do it. They get at least 40%. But whether you believe it or not, I'm going to show you the numbers, right? And you can decide for yourself. You can go even deeper in the money if you want. But you've got to have a trading plan and you got to set it up for yourself. I'm going to bring up this website that I like to go to called Investorgov, okay? And I put in, let's say you start with $200,000 in the investment. I don't know how big your portfolio is, but let's say this investment is $200,000 and you're going to keep doing it over and over again, and you're going to do it over and over again for 5 years, and you're going to, instead of making that 83%, we're only going to cut it in half and do 40, and we're going to compound it monthly. We'd get more if we compounded it every week, even though we're doing the trades every week. Let's just say that we compounded it monthly, okay? They don't give me a weekly option. If I hit the calculate button, it comes up that $200,000 in 5 years turns into $1.43 million. Now, why do I think that's important? Well, I mentioned this a lot in my videos, but you've got to do 11.1% just to beat inflation. That's been the rate yearly for the last 4 years. Meaning your rent's gone up, your mortgage has gone up, certainly insurance is going up these days, your cost of living is going up. If you bought a car, you're spending a lot more money. It's about 11%. I don't care that the Fed tells you it's 2 or 3%. It's not. You know it, I know it, everybody knows it. So you've got to at least do 11% just to break even, just to be able to buy something in the future, right? Otherwise, your buying power erodes. Most people don't get that. They think they put their money in their house and their house goes up in value, but the house only went up in value to the rate of inflation. They're not getting that much farther ahead by owning a house. In fact, you got to spend money on the mortgage. You got to spend money on putting a new roof on or redoing the kitchen, and the bank ain't doing that. You got to spend that money just to be able to keep up with inflation. That costs you money. All right, I'm giving you a lot of my themes here, but the bottom line is you've got to have some kind of program where you make money, and that money has got to exceed inflation. And you can see 200,000 turns into 1.4 million. Okay, so I hope that's exciting for you. I get really excited about these kind of numbers. I call it financial pornography. Now, I teach people how to do this all the time. And if you want to join me, great. You can watch these videos for free for sure. I love doing them, and I love it especially when you comment and you subscribe and you like and you tell me that you like bald people or whatever. But I like teaching people. I like to see their eyes go open when I teach them something. Like a lot of people lately are like, I'm losing money if the stock goes over my strike, but you're not. And then once that light goes off, they're like, oh my God, I didn't realize you could make money by being in the money. So that's number one. But listen, I've got a mastermind group where we get together and we celebrate our wins. Like, have you ever wanted to be celebrating a win with somebody, but they didn't understand what the heck you were talking about, or they were in a different financial situation, you didn't want to make them feel bad, or you thought you would feel bad if you weren't with them? This is a group of your peers that we get in every week. We talk, we have texting back and forth, we share ideas, trade ideas, and we celebrate our wins. I think it's really important. Last week we celebrated a win. One of the guys made $250,000 last week. Other guys are all approaching like their yearly numbers. So everybody was smiling and sharing their numbers. And one guy's like, I'm at 37%. I only have 3% left to go for the year to get to 40. Stuff like that just makes me really happy. So that's my mastermind group, and that I really believe is the way to learn anything, is to get immersed in it. But if you don't want to be a mastermind person, you're kind of a loner like I am sometimes, you want to do it all on your own, I've got a really great course called the Cash Flow Machine Elite Course. And that's like 16 modules and sub-modules with all these videos in them. And I teach you everything from how to read stock charts and how to understand stocks to how to do options and pick the right options and do options for income, how to get your brain right and risk management right, how to set up a trading plan, which you should have, and then keep going with that to synthetics, like I just showed you, synthetics. But the main thing is, if you're going to do synthetics, you got to know the risks, and you got to know how to adjust them when the stock goes up, when the stock goes down, when the market goes up, the market goes down, or stays sideways. You got to learn how to do all those things. And I'm really proud that I get to teach people like that kind of stuff every single week. So if you're interested in that, there's links below, the mastermind, there's links below for Elite. And if not, you could just keep watching these videos that I put out for free. But give me a comment. Tell me what I'm doing right. If you don't like the video, you can give me a thumbs down. But if you're going to give me a thumbs down or you're going to give me any flack, be constructive about it. Cool. And tell me what I'm doing wrong or that you would like to see me do better so that I can improve. That's all. Listen, I hope you like this video. I want to thank you for sticking to the end. It's tough to stick to the end these days for a lot of things, but if you've done it, hopefully I've made it interesting enough for you to be here. So thanks for being here, and I'll see you on the next video. Bye.
Hi, Mark Yagi here, wealth architect and author of this book on my covered call investing system called the Cash Flow Machine. Listen, what you just saw is just one part of creating reliable income of 2 to 4% a month from the stock market. But if it were that easy, then everyone would do it, right? If you want to learn how I create investment income the right way, then you need to learn and have a system with rules and what-if strategies so that you can learn what I do when the market goes against me, what I do when the stock goes against me, how to adjust my trade so that it's always in a winning position, how much to risk, how to build a multi-million-dollar portfolio that creates income of $10,000, $20,000, or $30,000 a month in semi-passive income. And best of all, the whole cash flow machine system takes less than an hour a week to implement. Just go to cashflowmachine.io to learn more, or click this link for more videos, masterclasses, and free resources. See you there.